Welcome to the Uncontested Investing Show, presented by REI Inc. magazine and sponsored by RCN Capital. Each week, we focus on bringing you candid convos from the best in the biz. Here's your host, Tim Harridge.
Welcome back to Uncontested Investing. I'm your host, Tim Harridge. Thank you so much for coming back by today. I'm here with a good friend of mine, David Olds. David, thanks for coming to Dallas.
Bet, man. Happy to be here.
So you and I have been following each other around social media for a couple years, but I was recently able to finally meet you in person.
Yeah.
And I'm just blown away at your business and the sheer quantity of business and kind of all you do. So if you would just take a minute, just kind of tell the audience a little bit about yourself.
Yeah, well, thank you. So I'm David Olds, full-time investor based out of Chattanooga, Tennessee, originally started in the Orlando market. And we moved to Tennessee in 2009 in the depths of the recession, which was the best time to go to a new city to buy properties because banks aren't lending. Banks were so busy taking back properties, they were not in the lending business. So just out of sheer desperation, we had to figure something out, and wholesaling was the answer. So yeah, just to make it a very short story, we moved and we're basically freaking broke. Like we had no money, you know what, like every investor, we were flipping and stuff before then, but you know, all those checks get spent pretty quickly. So yeah, we ended up in Chattanooga. It was my wife, my brother, 2 boys and 3 fat dogs. And we had to find a way to make it work. And wholesaling was the thing that started. So for us and like a lot of investors, wholesaling was sort of just the core, the impetus of everything. And, you know, we were desperate. It was that whole burn the boats thing. Like we landed, we had no other options. We had to find a way to freaking make it work. So wholesaling grew into adding some rental properties. And then as the market changed, added some rehabbing in there. And then that grew, and then we scaled it up again, and then scaled it down with some partnership issues. And then from there, we've added some coaching and our newest business, Ez REI Closings.
So just like, I'll never forget one time I almost offended Blackstone.
Mm-hmm.
Probably did. I offended them a lot, actually. I told them, I said, you're no different than any hard money lender ever. They're like, what do you mean? I was like, you started buying houses. You mastered that. Then you realized you could make more money just loaning people money instead of buying the houses, right?
Yeah.
So now here we are, Ez REI Closings.
Yeah.
Are you like a systems engineer? How did that become the business that you wanted to grow and scale?
Well, so I think anybody that has a business, it starts, there's just a bunch of little seed ideas that somehow one day just all come together. So for us, we're a nationwide wholesaling company, and we realized 4, 5, 6 years back, whatever it was, that because we have a really great dispo team, right? That's really one of the things I'm good at. We started doing a lot of JV deals. So that's great. We did a few $100,000 in JV deals in 18 or 19, whatever it was. And typically as a wholesaler, when you do a JV deal, someone will come in, they'll give you a deal or two, and then they're gone, right? They figure it out, which is fine, right? We want them to do their own deals. I would want to do my own deals and not lose 50%. But I had a couple people that just kept coming back, like over and over and over again. And I got on the phone with them and I said, listen, man, I love doing deals with you. What do you got coming up? How can we do more? But listen, let me ask you a question. Why do you keep coming back, right? Because I really wanted to know. A couple things. One, you do a great job doing dispo. I said, thank you. I know. We're awesome. Then they said the other reason is because we don't have to deal with title companies. I'm like, oh, well, that sort of stuck in the back of my head. So that was one thing. Another one, we were at a mastermind and somebody was talking about how they were offsetting some of their closing costs by putting an administrative fee into their selling contract or their assignment contract. So I thought, oh, now I can offset some of the things, the expenses in my business. And then the next thing was, right as COVID was hitting, we signed a lease on a massive office, 6,000 square foot, big for us, like great decision. It was so good.
Wonderful timing.
It was the best. I'm going to tell you, if you're ever scared about, going from $500 to $4,000. But anyways, so this office was divided into 3 big parts. So we had a main office, I had a great conference room, but then I had this other room at the front. And I thought to myself and my partner at the time, I said, this would be a little before COVID hit. I said, this would be awesome. We're going to do like a WeWork, shared office space. We bought these desks. We'll rent these desks for $200 a month. We'll make some money. It'll be awesome. COVID hits. Well, shit. So we had this space sitting empty. So sort of all these things came together at the same time. And I said, my God, this would be a great business, because people had asked us to do closings because we had a really great transaction coordinator. And then, we just sort of put it all together, and we just had the opportunity to do it. COVID happened. which made us realize that we can run virtually anywhere, almost any business virtually. So yeah, sort of all those pieces fell into place about the same time. And we spent 6 or 8 months going from that idea to where we were ready to launch it.
I love it. Love it. So one of the first segments I like to do is called the bottom line up front. And just imagine there's someone that's only going to listen for a couple minutes and then they get distracted. Yeah. Take up to 2 minutes and just share what you feel like the most important thing people should be focused on, maybe pursuing, maybe avoiding in today's marketplace. Yeah. You good to go?
I think there are a lot of different things. There's a lot of ways to make money in real estate. I can only talk about the things that I've done. And what I would say for people is always be buying cash flowing assets. So whether it's storage units, mobile homes, single families, multifamily, whatever it is. And it doesn't matter that the market's up, the market's down. As long as what you're buying today, you have an acceptable cash flow number per month, whether it's your number may be $200 a month, your number may be $500 a month. Because what's going to happen is over time, whether you're buying with owner financing, sub 2, or you're using, some type of lending, if that baseline mortgage is going to stay the same, rents are going to go up. We did a research project on rents over the last 50 years, and they have not gone down, not significantly. They may have leveled out for the most part, but over time, those rents are always going to go up. And for us, for me, that's where the bulk of our net worth comes from, is from our rental properties. I mean, it has 4x'd in the last 10 years. I mean, it's just absolutely insane. So for me, I'm a big proponent of rental properties, and that's a weird thing coming from a wholesaler. But, the way that we grew our company was we started with wholesaling, we got really good at it, and then we started adding on from there. So that's what I would say. Always, no matter what the market is, always be looking for opportunities to grab long-term cash flowing assets.
That's great stuff, because for me, a lot of people talk about wholesaling as a way to get started. Yep. They don't talk about wholesaling as a way to keep going. Right. And for me, I still wholesale. I own a company, DFW Investors, and we send out postcards, and we have SEO ads, SEO spend, and some pay-per-click spend. And primarily, I am trying to cherry pick assets out of it for me to keep. I bought a house yesterday. But ultimately, I'm from the South, and there's this ice cream called Bluebell Ice Cream. I know it. And their tagline is, we eat all we can and we sell the rest. I love that. And that's just kind of the way I look at wholesaling personally. I'm going to keep what I can, but, I don't have an unlimited bucket of money.
Or time.
Or time. Right. Or time. My crew may be busy, etc. So I think too many people want to thumb their nose up at wholesaling, and it's wrong, because the most successful investors I know, people in Dallas that own 500 houses, will still wholesale the excess inventory when they're out of capacity, capital, sometimes desire to execute on additional assets.
And that's the way that we started. Our vision when we went to Chattanooga, we wanted to buy multifamily properties, right? Everybody's playing Monopoly, single family, right? We're all on that game. And of course, we went up there. It's June of 2009. Banks are so busy taking properties back, they're not lending any money. So we decided we needed to throw out the biggest net we could, bring in all the properties. We cherry picked the ones that eventually we wanted to keep, but not every property is right for every investor, right? As a wholesaler, we will have a lot of investors who will call us and say, that property is a piece of crap, I wouldn't buy that. And the next guy who calls up is like, oh my God, I've been waiting for that, right? What some people call the hood, landlords absolutely love. What other people, they think they want this house on the golf course is not going to cash flow, right? So it's an interesting thing.
So we're going to take a quick break, and when we come back, I want to talk about market selection, maybe some things that you see the customer base experiencing out throughout the nation, some markets that maybe give you some concern or pause this time of year, and then all sorts of other things. So stick around. We'll be right back.
Are you looking for fast funding for your next fix and flip? What about leverage for your next long-term rental or vacation rental? Need capital for a new construction project? Look no further. RCN Capital has you covered. As the leading nationwide lender for real estate investors, RCN Capital offers short-term and long-term financing solutions for your next investment property. RCN Capital takes a common-sense approach to your loan request, offering high leverages and low rates backed by superior customer service. Whether you're investing in single-family properties or multifamily properties across the U.S., RCN Capital has funding options for you with no hoops to jump through. and quick closings in as little as 2 weeks. Ready to get a quote for your next investment property? Visit rcncapital.com/podcast to apply today. There is no fee to apply. Again, that's rcncapital.com/podcast to apply today.
Welcome back to Uncontested Investing. I'm Tim Harris. I'm still here with David Olds. And David, I want to dive right in. So thank you so much for my Christmas gift, the Chattanooga whiskey.
Isn't that great?
Which I did not understand where that, I haven't had it yet.
Okay.
I'm nice gifts like that, I wait for special occasions. And you sent it to our office in Connecticut, so I had to wait for it to get to me here.
Sorry.
No, it's fine. It's fine.
Did I ask you for your address? I think, or maybe it was on the bottom of your.
Yeah, I probably did.
Yeah.
Just didn't pay attention. You know me.
Well, I didn't say Tim. I'm going to send you a Christmas.
I'm sending you something. But let's talk about. You said you were in Orlando, or
Chattanooga, Tennessee, but I came from Orlando.
right? Originally Orlando.
Right.
You wait until the worst time of my professional life, 09, because I did 143 flips in 07.
Yeah.
Lost millions in 08. Like, no shame in saying that. What made you pick Chattanooga and why?
So here's what happened. And you were investing in that time period. It's very different.
That was high vesting.
High vesting, yeah. So it's very different from where we are today, right? First off, today is not that, right? Anybody who wants to be the fear mongering on social media and say that the end of the world is coming, it's not. So here's what happened. I was a salesman for 84 Lumber. So I sold doors and windows and, all those types of things. My wife was actually a purchasing manager for Ashton Woods Homes. So both of us were in the business. And so very quickly, I sold to major builders like Pulte, Lennar, all those people. And they have specs, this model, send me this stuff.
Yep.
Well, here's the first thing that we saw. And again, at the time, we did not know where it was going. So, they would send out and say, hey, we're going to make some changes to our base plan. We're going from 5 1/4 inch baseboard to 3 1/4. We're going from granite to laminate. They were making these downgrades, and we're like, okay, well, they're trying to squeeze a little more profit out of it. Maybe sales are getting slower. Well, that continued to happen. They start cutting people. So my wife is out. Okay. And as a salesman, things were starting to really slow down. People were getting a little bit nervous, but you still didn't know you were about to fall off the cliff, right? You had jumped out of the plane. You just didn't know your parachute wasn't going to work yet.
Yeah.
So all of a sudden,
funny story is,
yes.
Sharga said at IMN conference recently, it's so funny. He said, the thing about jumping off an 80-story building is the first 79 floors, you feel like you're flying. Right? So, yeah, absolutely.
So here's an example. The very last house. Anyway, so we knew that we needed to start investing in other places. Also, Orlando, incredibly expensive, right? So I had gone to the seminar. This guy's name was Dave Lindahl, wrote a great book about emerging markets, if anybody wants to read that. But we went to this event, and he started talking about all the different cities, and we sort of knew that we wanted to be like within driving distance of Orlando. Maybe not move, but start investing in other spots. And long and short of it is, we visited a bunch of cities, but I remember at this event in Boston, he was talking about Chattanooga. Small little market, 175,000 people. Volkswagen chose it to build its first production facility in the United States. At the same time, Amazon opened 2 distribution centers there. So, I'd learned about markets and how one market could be up, one market can be down. And I started really looking into, Chattanooga, and the prices had dipped maybe 10%. As opposed to, let me tell you what my last house in Florida did. We bought this house, 742 Trafalgar Street in Deltona, and it's seared in my mind. Anyways, typical little mid-Florida 3-2 ranch with a garage, right? So I bought it for $97. It was a probate deal. I'm like, we're going to do one more deal, and we're out. Well, I comped it against this, 1 block over, 2 blocks down. This house had just sold for $214. I'm in at what, 97, 98,000. I'm like, winner, right? I'm going to do a little quick rehab and sell this thing. So we bought it in August. And, I was doing all the work myself back then. I was younger, skinnier, and had more energy. And so finished it in like mid-November. I call up my realtor. Her name is Shayna. I'm like, Shayna, we're done. She's like, we should wait until January 1st. You don't want a bunch of days on market. Nobody buys or moves in the holidays. Okay, that makes sense. So she comes in and she's like, did a great job. I'm like, I know. Looks really good. I know. I said, well, let's sit down. What can we sell this thing for? So this is old school, right? 2009, she has the book, right? Remember? Like, we're going to look at some stuff.
Back when realtors had to work.
Different podcast. Okay, so she's going through and she says, well, this one over here sold for, 120. Like the comps were terrible. I'm like, well, those were foreclosures. What I didn't realize is everything that all the gurus have been coming through for 3 years teaching us how to buy foreclosures, well, all of those had gone back to the bank. And in the last 6 months, flooded the market. So I said, well, what can we sell this for? She says, probably 145. And I'm like, abso-freaking no way. My house is better. My house is better, right? I'm remodeled. So the stupidest thing a new investor ever says, right? So she's like, what do you want to do? Like, she's a listing agent.
Yeah.
That sign's going in the yard when she leaves anyway. She
I
doesn't
can
care.
get you.
Yeah. So, I mean, she did tell me the number. I said, nope. I thought I was the most magnanimous SOB that's ever walked the face of the earth. And I said, 165. I'm cutting my price, 40, 50 grand. She's like, okay, sign here. Out she goes, sign in the yard. This is January. Nothing. Not even a call for like 5 weeks. And I'm pretty patient to work with. Like, I was finishing out my job. Like, we were doing some stuff. I call her. I'm like, okay, Shana, like, June's coming. Like, I had a date where we're going to move. Let's go 155. Like, she kind of snickered and said, okay.
You said June is coming.
Yeah, June was when I was moving. Like, I told my job, like, I was out.
Yeah.
And they were going to transfer me temporarily up to Chattanooga. So, again, like 4 more weeks, nothing. Like, a couple calls, but no showings. Now I'm getting a little nervous because this is not what it was a year ago or even 2 years ago, right? We were put it on the market. It sells in 2 weeks. We're good. Okay, let's just do 145. She's like, I don't know if that's going to work anymore. I said, what do you mean that's not going to work? You told me. She says, yeah, but that was 2.5 months ago. So we went to 145. Still didn't sell. We had some showings, but it still didn't sell. That was bad, right? I have a perfectly remodeled house, but I'm competing with just the banks dumping stuff at $80,000, $90,000. So luckily, I've been around a lot of REIAs and I understood what to do. Started putting out signs, owner will finance, $5,000 down. So literally, like, that was what we left Chattanooga with, was $5,000 in a U-Haul. Me, my wife, my brother, 2 boys, 3 fat dogs up to Chattanooga. So that was a challenge. That's a market dropping.
So I was the same spot. Had to start owner financing things.
Yeah.
It was just the only way to get money in the bank because the security deposit on a rent wasn't enough to cut it. Right? I mean, and ultimately that ends up being the single largest financial error of my life. But, because all that you're locked in with the depreciation and you don't get any more appreciation. But anyway, I want to unpack some things you said because it's really powerful there. I was at the Scale and Escape conference in September, and this young man came up to me and said, I just reduced my house for the 3rd time, and it's not selling.
Yeah.
I said, well, how long has it been on the market? He said, a week. I think a lot of investors are learning the skill of marketing.
Yeah.
Right? I remember back in the day, when I was younger, skinnier, and had more energy.
Yeah.
Where 90 days on the market was normal. Yeah. And you planned 21 days or 21 showings, and then you looked at your price, product, and presentation, the 3 Ps, adjusted what you could, waited another 21 days or 21 showings, and it was methodical, right? And you just expected. And I think a lot of customers of your customers are experiencing what I heard at a conference the other day, a reversion. It's not even really a correction. It's a correction. Definitely not a crash, but it's reverting back to norm.
Right.
Could you share a little bit about what your customer base at Ez REI Closings or what they're doing to adapt to, I won't even call it the new normal, going back to normal?
Yeah. So we've had that conversation with a lot of people. When we first started, the progression for us was wholesale, rentals, and then 2013, 14, we realized the market. Then we started doing some rehabs. But the minimum we thought would ever be on the market was 30 days.
Right.
Like, we fully expected, like, hey, go stage it, take pictures, call me in a month when it's sold, right? Yeah. And then we'll take another 30 days or whatever to sell. So, yeah, the sell in 1 day business, which actually I did sell a house in 2 days a week or so ago. So we're still in good shape. But we've seen a lot of our wholesale clients switch over to novations, right? Because it just gives you more options, more exits, because they can sell to somebody who can get some conventional financing. Was with some clients 2 weeks ago, and they're wholesaling. They're closing on it, coat of paint, clean it out, maybe refinish some floors, right back on the market. So that's what our clients are doing. They're trying to look at the landscape. What are some extra exit strategies that I can use? Nobody's really shifting in a big way to owner financing or lease options, but novations and then just closing on it, reselling it. Those are the two most popular.
Could you talk a little bit about novations? I know a lot of the audience, it's a new concept. Yeah. Some people say it's illegal here, illegal there, etc.
Yeah, I don't, not an attorney, and I'm not the guy who teaches novations. You want Brewer or Corey Geary or Corey Boatwright to come on for that. But so a novation agreement essentially is, pick my words careful because I'm not the guy, but there's an agreement where I can market the property for you. We have a sort of like a net listing, but I don't think you can do those in too many states anymore. But I'm gonna take all the hassle of dealing with the agent off of your hands. We have a set price. I'm gonna go bring a buyer, and I'm gonna take that difference. Very similar to wholesaling, except that in wholesaling, it's an assignment of contract, which I probably cannot get Chase or Bank of America to pay me an assignment fee. But with a novation, I'm getting paid a marketing fee from the seller.
Yeah.
Feel like that's
a good explanation.
Okay, I just
you didn't step on any landmines.
I was trying to think carefully not to give bad advice.
You're safe.
Yeah.
All right. So a lot of people switch into novations.
Yeah.
Some wholesaling. Probably some longer cycle times.
Yeah.
What are you seeing volume-wise? Are you seeing people are doubling down in this market?
Yeah.
Are you seeing they're pulling back? What do you see?
So we have a mix. So our client base is very mixed, from the people that are doing 2 to 3 deals a month to the guys that are doing 30 and 40 deals a month. Anybody that's been around just a little bit and has a real fully scaled out business, they're doubling down right now. Like in our business, we're taking our PPC from 20 to 50. Like we're gradually going to raise it up per month. We're adding people. So the people that are running larger businesses, they see what's coming. Very similar to COVID. When COVID first hit, and again, it felt like the end of the world for a week, right? I remember pulling out of my office and there was not a car in sight. It was like The Walking Dead. But we knew that at some point it would end. So we took that opportunity to bring everybody back in. We're going to do training so that when we come out of this, we shoot off like a phoenix. I think that's what the serious investors are doing right now. We're doubling down because we know this will end and we'll come out of this very quickly. And we want to be positioned at the starting line. I don't want to be back 10 cars.
Yeah, because ultimately, if you want to run a race, you can't be in bed when they shoot the starting gun, right?
No, that's a great analogy.
I was telling my acquisitions team and this other investor that I help kind of with some mentorship. I was talking this morning. It's like, I really personally feel like the funds, the large institutional buyers, which there is an enormous amount of capital devoted to single-family investments institutionally.
If you were Wall Street, you would put your money in real estate too. It's far safer.
And it's all on the sideline right now because there's one variable that they need to plug in to their spreadsheet, and that's interest rate. Yeah. And right now, when they're unsure how much farther it's going to go up, right, and they're buying on a net yield and are relying on the securitization market, those two things it's a moving target for them still.
Right.
But as soon as, and a lot of people are talking about when rates come down, as soon as rates flatten and stabilize, it is going to be a feeding frenzy.
It is going to be unbelievable. So here's how I explain it to people. So people will often ask me about market cycles because there aren't that many people that have been through 2 or 3 of these things. And I for years I talked about, hey, we're going up the bell curve. We don't know exactly where we're at. You will never know for 5 years, right? Until you can really look back at the data, right? So anybody saying today that they have the answers is full of stuff. But anyways, so we're at the top and there's balance. It's good, right? Wholesalers, sellers, everything is good. Sellers know they're sitting on a pile of gold. Buyers know, but they're still going to get that appreciation that's going up. So the hardest spot for a wholesaler is when the curve starts to go down and it becomes a free fall. And the guy who came up to you, 3 reductions in a week. The way I explain that to people is it's like watching a fat kid chase a tennis ball down the hill, right? You can't get ahead of it because you don't know where it's going to stop, right? No matter how hard you run. So that's what happens to buyers. Buyers are trying to anticipate where the bottom is, right? because as a wholesaler, my buyer, he's gonna close on this. He's either gonna resell it, right? Whatever the case is. Same thing with funds. But so, wholesalers get down here, sellers are still up here. Once we get equilibrium again, then we're off to the races, because now it's a level playing field. The hardest thing is bringing those sellers down, and that's happening much quicker this time, quicker than last time, because social media, right? I ask people often, what's the difference between 2008, 9, and 10, and now? Well, now there's social media, Facebook, Instagram, Snapadoodle, whatever, all the things, 92 24-hour news channels, right? When they first made that 3/4 basis point, boom, the world just stopped, because everybody knows, right? And now if you're a buyer, you're so tuned in and keyed into what the news is, because you can't avoid it, right? It's impossible. Back then we had Dan Rather. That was it, right?
And that was a week delay.
Yeah. I mean, unless you were reading the Financial Times every day, you weren't as up to date as you are now. So information has changed.
It was interesting. My wife is a real estate broker, and she still does some work for some of our friends and close clients. And a good friend of ours that does a couple hundred houses a year had this $1.4 million house out in our town that he wanted to list, and she did it. And it was just interesting. It was 1.4, kind of the comps. They listed at 1.29 because leading the market down. And like 2 showings the first day, and then nothing for a month and a half. And then there was that day in late November when jumbo rates dipped into the 5s. 9 showings, 4 offers.
Yeah.
And I remember the first time homebuyer tax credit that we all were enjoying.
We took advantage, right?
Right.
We bought some in our personal name.
That's right. And so when I think back to that, I think that's going to be the next 12 months. There's going to be rate-driven rushes.
Yeah.
And people are just going to, that's the news they're going to watch. They're going to watch those mortgage rates. Locks and timelines are going to become really important. And I want to talk about timelines and managing transactions when we come back from a break.
Sure.
All right. So stick around. We'll be right back.
REI Inc. is a monthly business publication for real estate investors, covering all types of real estate investments and strategies. It is the most comprehensive real estate investment publication on the market. All of the articles are written by the top leaders in the industry, so investors are assured of always getting the best information possible. Each month, REI Inc. also profiles the top companies in the industry and provides insights and data into key regional markets. Along with their sister platforms, the REI Referral Network and Highest Invest, real estate investors have exclusive access to off-market investment opportunities and national acquisition and disposition initiatives. To learn more, visit www.rei-inc.com, where you can also access the REI Referral Network. Also, be sure and visit www.highest-and-best.com to view the latest exclusive off-market assets with near immediate acceptance decisions and closing strategies. You can also email marketing@rei-referralnetwork.com to request more information.
Welcome back to Uncontested Investing. I'm still here with my buddy David Olds. David, I want to dive into the last segment, but we've got to do the Money Minute.
Oh.
Imagine there's an entrepreneur, an investor, a younger David Olds, someone out there.
Yeah.
They're only going to get 60 seconds of advice this month.
Yeah.
I want you to just dial it in, think back, the best advice you can give someone. 60 seconds, go.
Okay, so I get asked this question all the time, and mostly it's, what is your biggest mistake or what is the biggest regret? And I will tell you, as somebody who's wholesaled 1,500 houses, my biggest regret is that I only kept 100 of them and not freaking 300 of them. I cannot tell you how often I look back and a Facebook memory pops up and there's this house I sold for $14,000 that I know is now worth $150,000. So my God, if you are wholesaling, and I understand, listen, I was that person. I was broke as broke gets, right? We were on ramen noodles, and I'm trying to do all the things for my family, but for the love of God, let me help you keep some of those properties. I started late in life when I was 40, so I love helping younger investors, but I promise you, keep some of these properties. Get some financing, buy some too, learn creative financing, whatever you have to do, but build that portfolio so you can get to the end faster. What is the end? Mailbox money, cash flow. So that would be my advice to everybody, is just keep more properties. If I could go back, I would have bought 300 or 400 properties instead of 100. Are we related? I don't know.
So for the last year, when I'm asked what's your biggest regret or what's your best piece of advice, my answer is very simple. It's just one more. And the Ed Mylett book, that's now a bestseller, The Power of One More, was not written about that. And I started saying it before I ever heard about the book. But I'm speaking with him next week at MinusCon.
Ed, every time I hear a story, it makes me cry, and I've heard it 3 times.
But I've been telling people the same thing. After 20 years in the business, 22, I'm getting old. If I'd kept one more house per year, I would have 22 more houses. Like you, I was buying houses for 20, 25, 30,000 that are now worth $300,000.
Ridiculous.
So let's just say 250. At 250, that's $5 million more assets. If I just kept one more per year. So that's, I'm so with you. I'm so passionate about that. It's delayed gratification. And so many of the people I've had on this show and this year have said delayed gratification. Eddie Speed said it probably the best. He said there's transactional money and there's wealth. And you should always be looking at it. If one's growing faster than the other, you're growing in the wrong direction.
Right.
And I think that's a very important message as we start 2023. Keep a house. If you're planning on keeping 3, keep 4. If you're planning on keeping 5, keep 6. Just one more than planned.
And it's so hard because everybody's influenced by social media, right? The Rolexes, the Lambos, all the little, can we say that? All the stuff, right?
Sure.
And they think that, getting these $80,000 assignment fees is awesome. It is. We did one a couple weeks ago. But, my God, you will piss through that $20,000 or $40,000, $50,000 assignment fee. It's nothing at the end of the day. But that $1,000, $2,000, $3,000 extra additional income that you can have every day, because here's what I ask new investors all the time, and I know we don't want to go long, but they'll come up and they'll want to have these conversations. I'll say, okay, Tim, what does the end look like? And I usually have to ask them about 3 times to get, what does the end look like? If you had all the money in the world, what would you do? So great, we get that answer. I said, okay, well, let's just do some math. What is that really going to cost? Most people think, I can have $1 billion. You don't. You need cash flow. You can live a really great life, really great on $30,000 a month, just coming in passively. So, great. How do we work backwards and get 30? Okay. 30 houses, 15 houses, whatever the number is. Now we know the number. How quickly can we get there? How quickly can we compress time and get there?
Well, what people don't understand is this investment into real estate, but we'll talk specifically about single-family real estate. It's, in my opinion, the best investment vehicle in the world because it's inflation indexed, it's residual income, and it has an underlying asset base. So it's like an inflation indexed annuity with an underlying asset base and appreciates. And also,
which is why Wall Street's so
the tax advantages. I mean, David, I'm happy to say this to the world. I don't pay taxes.
I didn't pay taxes for a long, long time.
The first $500,000 that I made in 2022 was tax-free from what I did in 2021. So I think it's very important. You got to keep houses. You got to take advantage. And you have to understand that the power of compounded appreciation. Warren Buffett in 1971, and then we're going to go into rapid fire, bought a house for $150,000. Sold it 50 years later it was 11 or 12 million. That same year, you could have bought a house in Mesquite, Texas for $10,000. And it would have been worth $250,000, $300,000. It's both of them are basically 6,500 to 7,200% growth. It's only compounded at 7 to 8% per year. The point is, the bigger number you can get to quicker, the bigger number that end number is going to be because it compounds. People don't understand compound.
So before we go too far, absolutely, I'm a simple guy. I promise you, I'm not that smart. There are half the things I listen to you because I follow all of your stuff, and I'm like, let me look that word up. So if you're you don't have to be the smartest guy in the room. One thing that struck me is when I first got started, these people up on stage were talking about making all this money, and I sat and thought, holy smoke, I'm smarter than that, right? I can do this. So, listening to you, and you have some really smart people on here. I don't know how I got a seat, but for real, this is a simple game. Buy and hold. just buy and hold. Like all the other stuff, just buy and hold.
Not to use cliches, but you don't wait to buy real estate. You buy real estate and wait, right?
And that's the thing too. So when people are listening to us and they're like, well, I didn't buy in 2009, so I guess I'm out of luck. Well, what's going to happen is in 2039, you're going to look back and go, God darn, I wish I bought some more stuff in 2022, 2023. It's going to happen. It just will continue to go up.
I pulled up the Federal Reserve has a chart you can pull up, and I've used it in a presentation recently, and I went back like 80 years or 60 years on home price appreciation.
Yeah.
And would you be surprised that it's up and to the right? The whole thing.
Imagine.
And it keeps going up.
But it's going to crash.
And there was a time that my parents could not believe that you had to pay over $100,000 for a house. And my kids will sit around a table one day talking about, can you believe my dad used to pay less than $1 million for houses? It's coming. It's going to happen. It's just up to, time. So I want to get into rapid fire because I have some questions for you.
I'll do my best.
Easy REI closings. Yeah. How many closings a month do you guys handle?
We'll do right now, because we're still growing. We've only been, a year and a half. We'll do between 50 and 60 closings.
That's busy. Only if I had to do 5, I would kill you.
5 was my busiest month when I was doing it all as a wholesaler, the buying, the selling, the closings, the rehabbing. Like 5 it's a lot.
Looking at that data set, what is the biggest challenge that people deal with when they're looking to scale their business transactionally?
So the thing that nobody ever teaches you, first off, nobody ever teaches you the second half of the business, dispo and transactions. It's all, all of the education is geared on the front side, right?
Yeah.
PPC and SMS and all that stuff. They don't teach you how long it takes, right? When somebody's teaching wholesaling, Mr. Smith's going to sell, you're going to contract this thing. It's going to be cash. You're going to find a buyer, boom, you're going to go to the title company. It's going to be fine. But they don't ever tell you about the issues,
right?
The probates, the dead people, all of those things. And that feels like you're walking through quicksand, because most entrepreneurs like me, we're just yappy. We just want to talk all the time, right? That entrepreneurial mindset, that hustle mindset, right? The reason we left our 9-to-5 job and got into this is to go out and talk to sellers and go out and talk to buyers. And paperwork, not your forte, different personality type. So those things feel to a new wholesaler who's trying to get started and ramp up, feels like walking through quicksand. So when we can all of a sudden take that off your plate, now you can just do more of the stuff that you really enjoy.
What's the hardest part about dealing with the customers? What do they drag their feet on the most?
Well, again, so title companies love us because we will extract all of that information. But listen, sometimes it's a challenge, right? Some of these guys, like probably one of our best clients, is so good at going out and wrapping up properties, and we need an answer. Like, I won't say his name, but like we're sending this kid texts and call, dude, you just got to sign this document. So there's, we're a little bit of a nanny sometimes for them too, but we're that part of their business that is dependable. You can sign up with us and tomorrow you have an office full of experts.
Well, it's like I told you, we close hundreds of loans a week, and I'm always telling the salespeople, it's like, hey, look, like these people aren't just sitting at their desk waiting for you to send them a DocuSign.
No.
Right? Like they're at Home Depot, they're at a living room kitchen table, they're at their kid's baseball game, and insurance is one of those things that we have to fight people to get.
Yeah. And listen, I'm terrible too. I was sitting this morning in my hotel finishing my personal financial statement so that I can do some refis next week, and dreading life in spreadsheet hell, because I don't keep up on it as good as I could, because I'm not great at that either, right? Thank God I've got I always say an office full of girls, but we have Ethan over there now, but like that they love that stuff. Like I could send a couple weeks ago before Scale and Escape, I sent one of the girls, Shelly, I'm like, hey, I need this spreadsheet. She's like, give me 10 minutes.
Let me ask you about that.
Yeah.
How important is it to avoid your weaknesses and just hire someone else to do it?
Well, I think you have to do it. I think you have to go through the fire and understand. Like you have to understand how to do something. No different than a rental property, right? When you get a rental property, you should self-manage, I think, for a little bit. You should go paint the walls. You should change out a water heater. You should do some things. Because if you don't and you just hire it out, someone's going to come and go, yeah, man, $950 for that water heater. You're like, oh, sounds reasonable to me. That's how I am with car repairs. I don't know jack about them. But no, I think you should do some of it because, one, you need to train your person, right? Whatever it is. You need to understand how to manage them, because if you don't understand the time that something takes, like how do you manage that? How do you track that in your business? So I think you should have some grasp of it, at least how it goes, right?
But at that point, once you grasp it,
Yeah.
how quick should you get out of it?
Oh, as quick as you can. As quick as you can, because you're going to hate that part of your business.
Right.
And then when you hate it, you're going to avoid it. That's why, in our case, that's why deals don't close, right? Because you're like, oh yeah, I'll get to that. Same thing with me and my accountant, right? Poor guy. You're like, yeah, I'm going to get to that. I'll get to that, but I'd rather go do this fun stuff. I want the cotton candy.
My poor team,
I'm going to leave the Brussels sprouts.
they'll tie up a house and I'll say, no, I don't want it. And they'll be like, well, how much do you want for it? And it'll take me a week to get back to them.
Yeah.
Because I don't want to take the time to look at comps and a company that pays me a lot of money one time called and said, you are the hardest person to pay. Would you send me the damn invoice?
Yeah.
And I'm just like, But then if they send you, if they need an invoice for less than $5,000, they're probably not getting it this month. But when they would text me or email me and it was like $25,000, yeah, I'll take a couple.
I need that. Well, and that goes to, and I've learned so much, and all these different masterminds that we're a part of. Understanding who you are, like I'm the visionary, right? Whatever that means, but you have to have a great integrator, right? I have an amazing COO, and I could not function like without her at all,
Right.
And now they're at the point where her and I have a director of sales and director of operations or marketing. They're like, yeah, we don't really need you at the meeting. You're just gonna up. You're just gonna mess it. You're just gonna keep us going long. We just, so building that team around you that supports you and shares your vision and pushes things forward, incredibly important.
Our poor chief marketing officer, she is just wonderful.
Yeah.
And so much of what I do falls under her department.
Mm-hmm.
And they literally had to bring on this wonderful young lady named Mackenzie who got you signed up for this to have weekly check-ins with me and Erica to coordinate the crazy stuff that I've got cooked up and what I call reality. Right? Because we have these things called budgets and plans, and we can't just commit to go to an event. We actually need to figure out, like, is there a conflicting event?
Right.
Like, literally, I was bragging today on this call, David, you'd love this, and I was like, oh yeah, I don't have a single event between February 16th and March 23rd. And Mackenzie goes, or Erica goes, you're not going to the best conference ever? I go, am I? She goes, it was your idea. I go, oh, when is it? She said, March 10th. Where? Salt Lake City. Oh, that's spring break. I'll go skiing while I'm there, right? Like,
I've known this for a long time. I'm getting ready to hire an executive. We're going to promote her out of another department. I need somebody to babysit me. I man enough now that I can say that. Like, I need someone to hold my hand and say, you need to come over here. You need to get on this podcast. Here's what you're talking about. Go do the thing. Right. Oh, you have this you need to do today. And because, we have so many things going on and we're trying to, the curse of being a visionary and entrepreneur is you want to do everything. Like, literally, I'm sitting out in the hall here texting my operations manager. I'm like, hey, listen, I have this business idea. She's like, of course you do.
Yeah. All gas, no brakes, right?
That's right. Let's just do more stuff.
Well, so we're going to run out of time. Do you have any parting thoughts or parting shots?
Man, thank you for having me. I do appreciate it. The one thing that I'll tell people, and I'm sure you have a wide variety of people with experience levels that listen to this and watch this, is, if you're an entrepreneur, find a tribe. Find some people that you can be in this with, because being a wholesaler, being an investor, it can be lonely. You could feel like a man or woman on an island by yourself. And if you don't have people that you can share that struggle and the successes with, right? Because there are going to be days, I always say this, I do a terrible job. One of the Navy SEALs that wrote a book talked about, like, Hell Week, there's 6 or 8 of you. There are going to be days where some of you are down at the bottom and other people are on this euphoric high. And you need to have that group of people that can lift you up, and then you can be there, to help them when they need it. So that's what I would say. Make sure you find a tribe, whether it's local or a mastermind or a base. Somehow you get connected with some people, and because don't quit, right? Like, our business has probably the highest fail rate because people just don't understand how to get through the hurdle that they're facing.
Well, and like you said, and also something I learned the hard way is John Lee Dumas, one of my favorite podcasters, Entrepreneurs on Fire. He signs off every episode by saying, remember, you're the average of the 5 people you spend the most time with. And then he says, like, today you've been spending time with TH and DO, right? It's so true. And, some people that are listening to this may start wholesaling, and when they make $100,000, if they share that with their family's going to put their hand out. They're going to expect help. And so what happens is a lot of times you can't share your successes with anyone because it seems like bragging, right? And I think even more, as equally as important as getting help when you're down, you've got to celebrate your wins. And you've got to be able to share it. And then you need to talk to someone smarter than you, which I do all the time. Like, I am not smart. I just act that way on TV. Someone needs to give you advice on what to do with that money, right? You need to be able to say, David, I made $100,000. And I need David's 20 years of experience to say, you owe the IRS 40 of that.
That's right.
And you're like, huh? Because if you've never made that much, we've all been there. Everyone that's been in this business 20 years has ended up learning that tax lesson really the hard way. So I think that's great advice. And before we go, EasyREIClosings.com.
Yeah, EasyREIClosings with an S.com.
Social media?
David Olds, REI. And again, we talk about people not believing things. We put a bunch of content, just content all the time out on Instagram. And, we have 200 and something thousand people that follow it. And it's amazing the people that can't grasp, oh, you didn't buy that with no money. You didn't, because just people aren't educated. So, we try to help and educate wherever we can, but we definitely want to, surround ourselves. And I do struggle with celebrating wins. I'll be honest with you. I'm always, my mind, I was trying to explain to somebody, I'm always 2 months from today. I never operate in the today. I'm always, well, what's 2 months going to look like?
Well, David, thank you for coming.
No,
we're out of time.
Thanks for having me.
Thank you for listening. Thank you for stopping back by. Just remember, always remember, your network is your net worth, and today you've been growing both. We'll see you next week.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.